Welcome to Insights. I'm Eric. Thanks for stopping by today. We're going to talk about Matrix. We're going to talk about they really focus on the stock indices down here. There's a lot of conversation out there on the internet, everywhere else. Everyone's talking about how we're entering a recession and how the stock market is looking increasingly vulnerable as a result of it. And it's really not something that's showing up in the Matrix, but then again, we're not on national TV, so I don't suspect this will be followed too closely, and it just often means that when perhaps the recession will come, but then the stock market does something else, everyone will be surprised. But we're going to talk about that briefly in this update, and we'll probably update the economy and stock report soon. A couple things I want to focus or touch on is the S groups down in here. You can see a lot of them are starting to turn up. You can see the one counts here. Everything over on this side, and this is BU for bull, this is BR for bear. A lot of things in the S column were all in bear, and they were pretty well pinned, and now they're starting to migrate over. This was the first hint that something's up and that it's turning a bit more bullish than people realize. You can deny it. You can see these things. You can see these setups and then construct your own conversation as a result of it. But you're just selling a narrative. If you want to be bearish while everything starts to move over in this column, then that's up to you. But this is not why we do this. This is not why we publish the matrix. The other thing that you want to focus on are the stock sentiment models here. These are intermediate models. There's two major ones. There's sentiment and there's the VIX model. And then you talk about the phases. Both of them are in a bull phase. You can see it here, bull, bull. When they agree, they're bullish, and it's highlighted. It flipped over on 11/3/22. That's difficult to send the stock market into a protracted decline, a bear market, when you have a double agreement like this, but I suppose people will do that anyways. That's something that you can check up on your own. You can always watch this. I would continue to watch this. If you lose this, it'll go into consolidation or it'll go into bear phase, but for now it remains in bull. Another observation that's taking place is the intermarket trends, which are down here. That shows the relationship between the different parts of the indices, the industrials, NASDAQ, S&P 500. The leadership has been the Dow. It's been that way for quite some time. It's losing that leadership, though, and what you can see is the Russell 2000 is starting to move up. That suggests a market that's becoming more economic focused, domestic, inflation driven, things of that nature. The S&P 500 is considered to be the soldiers. When they lead, that's actually good for the stock market. They're not there yet because they're not on top of the table, but they are moving up. They were pinned at the bottom for a while, and they are starting to move. And there's different ways to look at this. Is the intermediate one that we focus on in the matrix. There's longer term intermarket trends as well. We talk about those in the reports. They're still pinned on the favoring the Dow Industrials, but that will shift. It talks about when the Dow Industrials are leading, it's international big money. When this takes over and there's new leadership, the computer is going to point out something else, and I would keep an eye on that in the coming weeks to see if the Russell flips ahead. Each day this is recalculated. Each week it's repositioned. So you want to keep an eye on this. If the Russell 2000 takes up leadership, it is another bullish factor that's taking over, that kind of refutes what's taking place within the overall discussion. Some of these longer term cycle we talk about in the ES and or the economy and stock report. We're not going to go over those in this quick review. But we will talk about, and I'm going to point out again, that the relationship, the correction, crash section, this is a timing table. This is really the computer's attempt to go over everything, and it just lays out some probabilities. The crash or correction probability is 20%. The stability is about 80. This is favorable for an economic backdrop that's improving. This is also better for the stock market. If we were heading into a bear market, these percentages would be flipped or inverted. This would be 80 and this would be 20, and it's actually quite stable and looking pretty bullish. And it's something that I find amazing that no one's talking about it. But then people on the internet tend to sell narratives, and that's a narrative. People want to be bullish. They want to call technicians, and everyone else wants to see something that's lower. The problem is the backdrop isn't as bearish as it looks. This is consistent with a developing bullish environment. I've said this before, and I'll say it again. and most people are missing it.